Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. Before moving any further, I want to wish our viewers a very happy Diwali, a very prosperous new year ahead, and of course, health, wealth, prosperity, and most importantly, peace of mind. Of course, Samvat 2081 wasn't all that jazzed up when it comes to returns for the equity markets, but other asset classes including gold and silver did extremely well. In fact, gold has outdone or outshone equities by leaps and bounds. A 65% return on gold prices this year itself, and I think that's the best gains that of course the best year that gold has seen since 1979. So yes, equity wise wasn't all that great, but mind you, on the headline indices front, it may not have been great, but there were individual stories that did see gains of somewhere around 20 to 30% as well. So not all that gloom, and last 2 weeks have been fairly upbeat with the Nifty now hitting the 25,900 mark. Who knows, tomorrow in Murat trading session itself, we could be looking at 26,000 back on the screen as well. So, heading into summer 2082, things have picked up steam. Earnings have been far better than what the street was anticipating. Look at banks, how they are upbeat, and they are all fired up. The Nifty Bank Index also hitting a fresh high today, thanks to all the earnings that came out over the weekend, and of course that big FDI in the banking space with Emirates NBD looking to buy 60% stake in RBL Bank. That's another thing that has fired up sentiment when it comes to banks. But yes, we'll be talking about how to really look at investing in summer 2082. We'll be getting you big market voices on the show as well, and of course, in terms of levels, we'll be asking our experts as to what the charts hold for us. Can we look at 26,000 in the coming sessions, given the fact that we've seen the Nifty rallying for the fourth straight session today? In the morning, the bulls were extremely upbeat. They were all fired up. They were in party mode. But since then, I think some bit of fatigue did kick in, and we did see the Nifty coming off, or the market in fact coming off from the day's high. But nevertheless, they are still clocking in gains. Fireworks, as I said, continues, but in terms of Samvat 2071, there were wide divergences when it comes to sectors in Samvat 2081, because IT was one pocket that was the year's biggest underperformer. Autos and bankings, of course, were leading the gains. IT index, just want to recap it for you, fell 16% in Samvat 2081, and that too was weighed down by a series of headwinds, the likes of weak global demand, rising H1B visa costs, cautious discretionary spending from US and European clients as well. But yes, so that was about Samvat 2081. But which are the sectors that are expected to take the lead in Samvat 2082? Then that's the key question, and that of course we'll be asking our experts. In today's session, just want to quickly recap in terms of the Nifty movement. We are above the 25,800 mark. The Midcap index is also up almost 1%. Bank Nifty 0.5% higher, it stays above that 58,000 level as well. In terms of individual movers, of course, Reliance Industries, that stock deserves mention. Right from the start of the day, it took off, and now as well it's up somewhere around 3.5%. So just from the word get go, it's been trading with gains today. Some of the other movers that weren't doing all that well today, the likes of ICICI Bank bucking the trend here. I think loan growth kind of slowed down a bit, and that was something that the street didn't like. You have JSW Steel, Eternal cooling off a bit, HDFC Life, Ultratech Cement, HUL ahead of earnings, Bajaj Auto cooling off a bit, Nestle and Power Grid Eicher Motors. These are some of the other movers that are not doing all that well. But on that note, let me bring on board our expert for today. Joining me is Rajesh Bhosale, Senior Technical and Derivative Analyst, Angel One. Rajesh, lovely chatting with you. Want to take this opportunity to wish you, your team and your family a very happy Diwali.
Hello, afternoon, and wish you the same happy Diwali to you and all our viewers on the Moneycontrol. Yeah, it's been a very consolidating year till now, since last 1 year. But going ahead, the kind of formation we have seen in the past weeks, we are likely to see more promising milestone in the coming year.
All right, promising milestones in the coming year can't be ruled out. But the first milestone I want to talk about is 26,000. At one point in time, it was looking like we would clear that on the upside as well today. But of course, we hit the upper ceiling for today in the sense that perhaps some resistance levels where we kind of cooled off after hitting. But 25,900 was cleared on an intraday basis. This week itself, would you expect levels of 26,000?
Yeah, so what we are witnessing is today it's the fourth consecutive gains, and we are headed for the Murat trade and then once a midweek holiday. So market is somewhat getting into a consolidation mode because some intraday indicators are a bit overbought. But having said that, last week we have seen a major breakout on the Nifty weekly chart, where we are seeing a trend line breakout from trend line joining from the lower tops from the all-time high levels. So after this breakout, we do expect Nifty to head towards 26,000, 26,300, and further in the coming days. If you see Bank Nifty, it's already trading in uncharted territory, and we expect Nifty to follow the same.
All right, expect Nifty to follow the same. Nifty Bank Index, for the benefit of our viewers, hit a fresh 52-week high today. And of course, right now is well trading above that 58,000 mark. But let's talk about individual names in the banking universe, especially the mid-sized ones, the likes of DCB Bank, which is clocking its biggest single-day gain since April 2022. During the quarter, the credit costs declined, margins also expanded. So this combination is, of course, working well, and which is why we are seeing the stock gaining the way it is. RBL Bank, I mean, that's we're looking or eyeing the big league now post the $3 billion Emirates NBD deal. Other banks like Federal Bank, of course, that's also considering a fund raise and hasn't really clarified on any kind of interest from a private equity giant, but that we'll come to know in due course. Aside of that, you had AU Small Finance Bank, that was a beat and how. IDFC First, PNB, good numbers. Which of these charts are catching your attention, and which one is looking like a good trading play and which one is looking like a good positional play right now?
So, if we see AU Bank, a massive breakout is there on the weekly as well as monthly chart. So, in the past, December 23, the stock made a high somewhere around 820, and then a couple of attempts it did try to cross those levels, but it failed. But now we are seeing a significant break above that. So, we are seeing a multi-month breakout on the AU Bank. So, possibly we are expecting levels somewhere around four digits. So, stock can go into the thousand level mark. So AU Bank is one which we are liking. Along with that, you highlighted DCB Bank. As compared to AU Bank, DCB Bank is coming out of a consolidation which has been forming a base since 2020. So not much has happened in DCB Bank, but now after strong consolidation of more than 5 years, a breakout is happening. So possibly the stock can head from here towards the levels of 170, 180 levels. So DCB Bank is not much tracked or not much stock, but after consolidation 5 years, strong performance is expected. 160 to 170 is what we are expecting in the near term.
Okay, those are the two banks to really watch out for. What about Reliance Industries? Numbers were a top-down beat. O2C, retail, digital services, all of them did well and contributed to the quarterly earnings. Some of the targets for Reliance Industries, for Nomura, it's at 1700, and Morgan Stanley has another target of 1701. You have other brokerages as well who pointed out that a re-rating could be around the corner. The more bullish targets are in the range of 1695 to 1700 or thereabouts. The stock is very close to 1500 levels as we speak. What kind of levels you'll be watching out for here next?
So if you see from the July month, not much was happening in Reliance, but it was holding on to its 200 DMA. And now finally, considering today's momentum, we are seeing a channel breakout. This breakout is seen with strong bullish gap and with volume. So we expect a continuation of up move. From the charts perspective, the July swing high of 1550 is what we are expecting in the coming weeks. And once that is crossed, then possibly 1600 can also be tested very soon.
1600 could be tested very soon on shares of Reliance Industries. Let's talk about some of the other result reactions that weren't all that great. The likes of Tejas Networks, it swung to a loss this quarter. Stock was down quite a bit. Any thoughts here? Is it worth a look? And if somebody has positions, how should they approach?
See, this has been an underperformer market. It's back towards its all-time high, but the counter has not performed well. In fact, any bounce recently has been sold into, and we expect this underperformance will continue. Possibly the stock can slip further below the 500 levels. It was holding on to 550 levels since last few months, but that has been broken with huge volume. So expecting prices to slip further towards slip further below 500. So exit would be the, view on this counter.
Hmm. Okay, that's about Tejas Networks. I also want to talk about UTI AMC as well. That's seen its biggest single day fall since its listing back in 2020. There are concerns about market share loss that have been weighing heavy on the stock as well. It has been an underperformer. If you see the last 1 month or so, it has given negative returns. Even last 3 months, you've seen, I think, a 10% kind of a cut on the charts. Here on the downside, what can one expect? It's at 1337. Uh, would you expect this weakness to continue, or is it approaching its floor?
So if you see, yes, exactly, it's holding on to its flow. The stock is definitely under pressure, but from the morning lows of around 1260, the stock has rebounded quite a lot of ground. So as long it holds the levels of 1260, that has been a base since August month. Price it has acted as a support. So as long 1260 hold, one can continue to hold on to the position. In fact, last week it was one of the top performers. So hold on to it. 1260 to be the stop loss. On an immediate basis, immediate resistance would be around 1410. And once that is taken out, then possibly 1500 can also be expected. Having said that, currently the stock can be into a consolidation mode. If anyone is holding on to it, 1260 would be the stop loss.
Okay, 1260 kind of a stop loss for UTI AMC. The stock has been under selling pressure today as well on the back of weak earnings. But let's talk about Dixon Tech as well. This stock has also been in a downtrend, so to say, entire year. It has seen negative returns. YTD, I think it's down 10% or so. There has been a slight cut in its volume guidance. Perhaps that's why the stock has taken it on the chin and it's down another 3.5 to 4%. The stock did try to make some kind of recovery, but any attempt at a recovery has not really sustained. Do you see any kind of rebound after this persistent weakness on the charts?
So what we are seeing on the charts is that from the June swing lows, from the levels of around 13,000, the stock had rallied towards 18,500, and now we are seeing some profit booking. Now, important levels for this counter would be around 15,600. So that is its 200 DMA. And if we can see the charts of August and September, twice the stock bounced from its 200 DMA. So as of now, 15,600 would be the key support. If that is breached, then further sell-off can be expected. As of now, can be hold on a bounce back. Immediately 17,000 would be the resistance, and once that is crossed, then the stock can resume its up move. So as of now, it's under pressure, but it's on a key support. 15,600 would be the key level to watch out in the near term.
Okay, 15,600, keep that level in your mind in the near term. How are you approaching a Hindustan Zinc now, Rajesh? Of course, silver prices have cracked quite a bit after that stupendous rally that we have seen. I think silver prices dropped somewhere around 8% or thereabouts. Hindustan Zinc, any views? Is it, a buy on dip kind of counter, or how would you approach?
So yeah, it's a buy and dip counter as of now, because if we see the multiple time frame RSI, it's in a strong positive terrain, and currently we are seeing some profit booking somewhere around 460 to 465. would be the key support zone, key retracement levels, and key averages. So once it comes back towards 460, 465, we have to recheck the chart if the selling momentum is still there, or if there is any kind of bullish reversal. So as of now, it's in a correction mode, but somewhere around 460 to 465, we expect the stock to form a great support zone.
Hmm. Okay, that's the view, and around those levels, the stock can find some support. How are you looking at IT after last week's, weakness? We're seeing some bit of a rebound in IT names. Most of the numbers are out of the way. What would you do with some of them right now? The likes of TCS, Persistent, even HCL Tech for that matter declared its AI revenues. Uh, Infosys, anything that's worth a look, or would you say there are other opportunities in the market?
So yeah, some of the counters are definitely looking good at current levels. If we see Persistent has seen a stellar run from its recent lows of around 4,800, almost 1,000 point of run, and still the chart looks promising because we are seeing a rounding bottom kind of formation, and this one counter is trading above its 200 DMA. So we expect this performance to continue. Prices can extend towards 6,200. And as I highlighted, the 200 DMA, which was previously acting as a resistance, can now act as a support on any kind of dip. So 5,600 is likely to act as a support, and 6,200 is the resistance level. The second buy call, second counter which we are liking from the heavyweight basket is the TCS. It's trading around its multi year lows. Okay, so 2022 years it's at retesting. Along with that, monthly key averages are placed, and some kind of base formation is happening at current level. So good risk reward at current levels. We expect some kind of bounce back, possibly 3250, 3300 can be retested, and on the downside, somewhere around 2800, some kind of base formation is happening.
Hmm. All right, that's about the IT pack. TCS, of course, looking good among the large cap IT names. But I think the large cap FMCG name HUL will be reporting numbers pretty soon. Uh, Anything that you like within the FMCG back, because some of these stocks did see a pop after say the GST cut or the income tax cut, but haven't really been able to fire up in a big way. Uh, so, do you see that happening anytime soon? The likes of HUL, ITC, Britannia, do you expect any kind of big pop anytime soon?
So especially we are liking HUL. If we see current today it's trading a bit on a negative note, but last week it did had a strong performance from its 200 weekly moving average, and the kind of formation bullish engulfing we saw, we expect some kind of base of formation is there, and as long it holds the levels of 2,500, there is a possibility that stock can remove back towards the September swing highs of 2750. So 2450 would be the support zone, 2450 to 2500, and on the high side 2750 to 2800 would be the next level to watch out. The counter which we are liking is Tata Consumer Product. On the weekly chart, we are seeing a strong inverse head and shoulder pattern breakout both on the daily and weekly chart. So multi-week breakout, and possibly the stock can move towards levels of 1250, 1300. So a bit bullish on Tata Consumer and expecting strong performance.
Hmm. Okay, Tata Consumer, that's the one big bet from the FMCG space. Any thoughts on Tata Motors post the demerger?
So, if we see post the GST 2.0, we had a strong move in the auto space, but Tata Motors is one of those counter has not participated in that move. But having said that, if we see the weekly charts, the stock is some kind of
Hmm.
forming a base around 380, which is its 200 weekly moving average. So, we see a good risk reward at current levels. 380 seems to be a strong base. And on the high side, if we see 410, 420 are the key resistance level. If we see post adjusted price, 410, 420 is crucial. And once that is crossed, possibly 460, 470 can be expected. So as long 380 holds, we are expecting a good risk reward and a bounce from current levels.
Hmm. Okay, expecting a bounce from current levels and risk reward looking positive or attractive for Tata Motors, post the demerger. But talk about the NBFC lot. Bajaj Finance, hit a fresh high recently. You have Shriram Finance. That stock has, I think, gained somewhere around 12 to 13% this month itself. So far this month, even Bajaj Finance, as I was mentioning, that's up somewhere around 8.5% or so. On the charts within these NBFC names, would you prefer a Bajaj Finance more, or would you tilt more towards the Shriram Finance?
So from the charts perspective, Shriram Finance looks much better. Bajaj Finance seems to have moved already. Some kind of overbought is there. But if we consider Shriram Finance, we are seeing a fresh flag pattern breakout, and possibly the stock can further move towards the levels of 730 to 740. On the downside, the last 2 to 3 weeks base somewhere around 660. That seems to be a strong support zone. One more counter from this space that we are liking is a Bajaj FinServ. So if we see the charts from the April
Hmm.
month, it has been consolidating within 2100 to 1900 levels. And after that strong base, we are seeing a strong channel breakout. And if we consider the price range of 200 points, so the prices can move further 200 points from here. So 2350, 2400 is what we are expecting in Bajaj Finserv in the near term.
Okay, Bajaj FinServ looking good, and so is Shriram Finance. But going forward, it's just about 4 minutes to go for the markets to shut. Since we have a 1 hour trading session tomorrow, would you have any BTST strategies at all today?
So one call that I'm liking is IndusInd Bank. I mean, as we highlighted,
Hmm.
banking space is in a strong momentum, but IndusInd Bank has not performed. And if we see IndusInd Bank today, it was under pressure in the morning session, but then it has recovered. Some kind of bear trap has been set, and further short covering can be expected. So this is a high beta counter, and in 1 hour trade for tomorrow, there can be a strong move. Possibly the stock can move further ahead so that IndusInd Bank can be bought with a stop loss of 735 and targets of somewhere around 820 levels.
All right, Hindustan Bank, a BTST strategy, but any other Mahura trading picks that you would be recommending for our viewers?
So pharma is doing well, doing good, very good in today's session. And if we see Dr. Reddy from the pharma space, it's been forming a base around 200 DMA. And today we are seeing a double bottom kind of formation, and it has also closed above its 89 EMA after a long time. So possibly a strong bounce is expected with a stop loss of 1240. We are expecting a move towards 1340 levels.
All right, pharma space, of course, looking upbeat. Dr. Reddy's you mentioned, but let's talk about a Titan as well. The stock has, I think, gained somewhere around 11% on a month-to-date basis. Of course, all these jewelry companies have been in focus given the way gold has moved as well. Uh, would you look at this gold theme via these gold loan companies, or would you look at some of these jewelry names like Titan, PC Jewelers? There are a lot of other jewelry companies as well. Anything that is on your radar?
So gold finance companies have already moved, so not much lucrative at current levels. But if we consider Titan, I mean, it has not done much in the last 1 year. And in fact, finally, after 1 year of slumber phase, we are seeing a bullish breakout. So possibly in the coming year, or if we see next couple of weeks, we are expecting strong performance. Possibly its previous high around 38 50 to 3900 can be retested. So Titan looks promising. A strong breakout is seen recently. So Titan can be bought with a near-term outlook.
All right, Titan, that's another pick, of course, from the jewelry space. But I think just about looking at the last ticks as we close trade and curtains down on Samvat 2081. Uh, I think the Nifty is up somewhere around 140 points or so. So 25,850 there that's where we are shutting shop. A good triple digit up move coming in. Sensex also up somewhere around 400 points. It's 84,370 almost for the Sensex, and the Bank Nifty record close 58,057. A 0.6% kind of gain. The Midcap index has taken the lead today. It's up 0.8%. So portfolios will be looking good today. 3:2, that's the advanced decline ratio on the NSE. 1760 gainers to 1160 declines. So I think it's almost a 7% return for Samvat 2081. One would say it's not all that great, because we had gotten used to double digit returns, right, over the last 4 years or so. So in comparison, this is looking like this is a little pale in comparison to that, but nevertheless 7% gain. That's how we have ended Samvat 2081. In terms of the other sectors that took the lead today, of course, it was the PSU banking index that was up somewhere around 3%. IT, after last week's weakness, we saw 1% gain on the IT pack. Pharma 1% gain. Nifty bank index up 0.5%, as I mentioned. Realty up 0.5%. What didn't do well were the likes of auto, taking a bit of a breather, down to almost 0.2%. Last Samvat, that is in Samvat 2081, banks and autos are among the gainers. But let's see how Samvat 2082 pans out. With respect to some of these consumption related sectors as well, especially after the GST reforms. But in terms of the individual movers today, then you had the likes of Cipla, that stock was up 4%, all fired up. Reliance Industries, among the top contributors today, 3.5% uptick on that stock. 1466 is where it ended the day. You have some of the NBFC names doing well, the likes of Shriram Finance, Bajaj Finserv, all of them gaining in excess of 2%. You have SBI, that stock gained somewhere around 2%. TCS among the gainers, so Titan, Interglobe, Infosys as well. On the flip side, ICICI Bank, after numbers, I think the loan growth is something that kind of slowed down a bit, and that disappointed the street. That was down 3%, sitting out of the strong rally that we saw on the banking pack. JSW Steel among the top laggards. Metals as a sector wasn't doing all that well on a day of strength. You have M&M, that was among the top laggards. Eternal cooling off a bit. Some of the life insurers also in the red, and so were the likes of Bajaj Auto, Nestle, HUL ahead of numbers in the red, Trent in the red, Eicher Motors, Power Grid, and some of the tech names. Although the IT index did well, but Tech Mahindra also sat out of the up move. Rajesh, before I let you go, anything that you would be watching out for from the results, the remaining results? You have HUL, as I mentioned earlier, but there are quite a lot of other names that are reporting numbers, the likes of SBI for that matter. PSU banks were all fired up today. We discussed some of the names as well, but with respect to SBI in particular, how would you approach?
We already highlighted HUL. HUL is looking good, forming a base formation. And then State Bank, if we see PSU banks are already doing very good, and we are seeing multi-month breakout in this counter. Even if we consider State Bank, it's trading at all-time high, strong formation, and we expect the outperformance to continue. Possibly 950 to 975 can be expected in the near term. So if there's some kind of dip or some kind of a profit booking happening, so somewhere around 872 to 860 20 EMA is placed, and that can act as a strong buying zone. So a buy on dip would be suggested. 1000 levels is what we are expecting in the near term.
All right, that's about SBI. But with that, I would like to thank you, Rajesh, for taking our time and joining in and sharing your thoughts. Once again, wishing you a very, very happy Diwali, a very profitable Samvat 2082, and health, wealth, prosperity, peace, everything. Hope everything comes your way in the new Samvat.
Thank you.
Thank you. Well, then, of course, we've closed Samvat 2081, I beg your pardon, with gains of somewhere around 7% on the benchmark index rather, the Nifty. But, IT, that was the top laggard of Samvat 2081. Banks, autos did well in comparison. So, let's see in Samvat 2082 whether, that could reverse, because, IT numbers haven't been all that bad, given the kind of subdued expectations that the street was really working with. So, we'll have to see whether, IT fires up in a big way or not. But looking at the close today, we spoke about, all the frontline stocks that did well. But let's talk about some of the mid-cap names as well that we haven't really touched upon in details. In terms of some of these tire stocks, they were also quite upbeat today. Fiat was up somewhere around 13%. You have JK Tire that was up in excess of 7%. So yes, some of these tire names that were upbeat today and among the top gainers on the Nifty 500 index. Talk about banking names, we already discussed. MRPL is another stock that was up 7.5%. Chennai Petro, that was also up somewhere around 7%. You have PVR Inox, that stock was up 6%. CESC up 5%. Radico Khaitan, that stock was up 4.5%. You have CRISIL as well, that was up 4% or so. In terms of the losers then on the Nifty 500, you have Tata Investment. That was the I think biggest loser on the Nifty 500 index. That was down almost 10%. Tejas, as we discussed with Rajesh, that stock got hammered today, 9% down on that particular stock. UTI AMC is the other one that was feeling the pangs after weak set of numbers. And Ola Electric, that stock is also out of in slow gear, so to say. That stock was down somewhere around 4% or thereabouts. And Dixon, after slight cut in volume guidance, that stock was also down somewhere around 4% or so. Well, all in all, that sums up the stock moves when it comes to the broader end of the markets. Nevertheless, the Nifty Midcap Index outperformed, and the breadth was clearly in favor of gainers today. So portfolios looking good on the last day of summer 2081. But on that note, let me bring on board Big Market Voice Sunil Subramaniam joining in this afternoon. Sunil, first of all, thanks a lot for joining in. Happy Diwali to you, and wish you lots of wealth, good health, and prosperity. And everybody, I've been telling everyone that peace of mind is of utmost importance. So I hope you have a lot of peace of mind as well in summer 2082.
Thank you, and I reciprocate the same to you and to all the viewers. A very happy Diwali and a very, very prosperous Samvat 2082 for all of you.
Thank you, Sunil. Lovely, and it's always lovely to be interacting with you. Good thing is that the bulls got into the festive mode just at the right time, right? 2 weeks we've seen the Nifty gaining in excess of 1200, 1300 points. We are back near the 26,000 mark. So although returns have been in single digits for the Nifty for summer 2081, what are the chances that equity as an asset class could make a comeback in summer 2082? Because this time, of course, it has been gold, hands down, gold, silver. Do you think we could take back those reins from precious metals in the coming summer? What are your thoughts?
I think, yeah, there'll be more even spread. I think precious metals will still give decent double-digit returns, but equities should make a strong comeback. And I think the reason for that is that, as you said, in this somewhat, we have just seen a 4% return for the Nifty as of now I was seeing, and the small cap index has been in fact minus 4%, with mid cap a little bit on the positive side. So clearly this has not been a great year for equities. And if you analyze the reasons, right, it's clearly the FII selling, right? And the FII selling on the backdrop of geopolitical and geoeconomic tensions, right? Both combined put together has also led to a re-rating of India from a valuation perspective, and which is where I think that the last year was disappointing from the perspective of FII investment for us. But from an FII perspective, they made the right call because Chinese market has delivered 50% almost returns year to date. So clearly where they've pulled out money from India and put it there, I think the returns have justified that. But for the very same reason, with a 50% rally there versus a 4% rally here, I think the valuation difference has got reset a bit. So I'm optimistic about the new somewhat that equities will gain back the strength, of course, on the back of the return of the FII.
Yes, and we've already started seeing the signs, right? Sell-off has abated. We've seen, meager amounts, but still small amounts.
Mm.
FIF have started coming back in, buying in cash markets, short covering as well, going on. But of course, once FIRs return, would you expect IT to be the first pocket to fire up? Because numbers haven't been all that bad. We were working with subdued expectations, but most of them have delivered. And what with all the AI investments that have been announced, some companies have started declaring AI revenues. Could AI for us as well turn out to be a big theme in the coming Samvat? And if FPIs come back in a big way, will IT be the first to fire up, since banks have already started firing up?
Yes, absolutely. And the reason for that is the correction that's happened. So the margin of safety in IT has increased now, right? I think 1 year it's what, 17, 18% down compared to a 4% plus for the Sensex. So you're actually talking about a 21% underperformance. And as you said, the numbers are decent. Only issue there, I would say, is that the companies are not talking very optimistically. And that's why the markets have not reacted positively to the numbers. But that's because I think the mood internationally in terms of the US, because of the tariffs, is still uncertain, right? But I think that that's a temporary phase, and soon the market will start respecting that. And one key thing here, Nandita, which I may say is, while FIs have been broad-based selling across the index, right? What DIs have been buying has decided what has given return and what has not. So the DIs have been buying banks. So it's not that FIs have not been selling the banks. The FIs have been selling fairly across the board, but DIs have stepped in strongly into the banking, especially the PSU banking space, and that's why the rally. So they have not bought IT. So what I'm trying to say is the step one is for the FIs to return. There will be broad-based buying where IT will also feature. Because it's fallen so much, it will bounce. And then because of that, DIs will then step in as the mood gets better. And the trigger for FIs to come back, remember, has to be some sort of a solution in the tariff front. At least an interim tariff deal between India and the US will be important for that. Otherwise, these trickles will probably remain trickles. I think the heavy selling pressure is off because the valuation differences have narrowed significantly between China and India. But for FIs to come back in a big way, I think there has to be some positive news on the tariff front. If not a full-fledged deal, at least an interim deal where the easy wins are taken. And then they say that they'll continue talking on the tougher parts like dairy and agriculture and oil with Russia and all of those. So I think that's got to be a key for the new somewhat. And I'm confident that in the space of the next 1 year, it will get sorted out in some form. And so your portfolio should actually contain a component that what if the FII returns in a decent way, that should be the ones which should form a significant part of your portfolio. Because that's been the gap in the last year, and I don't think that will be a gap for one more year to come.
Got your point. But we talk about the banking sector as well, since we touched upon it briefly. FPIs are still underweight, and global banks, of course, are now looking to invest in names like RBL and Yes Bank as well. But are we entering a new foreign capital cycle for this particular sector? We also have Federal Bank considering fundraise later on this month. They have, of
Absolutely.
course, not said that there is some private equity giant is interested, but of course, we'll come to know in due course of time. Could this be a new foreign capital cycle for the sector, and could that also dominate the themes, overarching themes, so to say, for Samvat 2082?
I think so. And the fact is, what you didn't mention is also the public sector banks. I think there are strong signals coming for government next round of mergers
Yeah.
to make banks globally competent and globally competitive. And when that comes, and there also talk of, remember, raising the FII limit in public sector banks up to from 20% upwards. So I think that, yes, I think foreign interest in the Indian banking sector, because I think the Indian banking sector has shown resilience right from the COVID phase where there was restructuring of loans to the post phase. I think asset quality has been fairly robust and strong. And India's penetration from a lending to GDP perspective, we are still behind the advanced countries, right? So we are at about 57, I think, percent or something like that. And advanced countries are at about 65, 70% easily. And so I think the scope for lending to grow. And the key element here is that consumption, the government which has woken up to the fact that the middle class as a consumption sector is the one which had suffered post COVID. And now they're putting all their energies behind this with the rate cuts and income tax, RBI rate cuts, as well as the GST cut. consumption is essentially financed by borrowing, whether it's through credit cards or through EMI-based auto loans or personal loans or whatever. And RBI is doing its bit to help that, raising the lending limit against shares to 1 crore. So I think that one, the retail lending aspect, individual lending, if I may call that, is also set to, and gold prices rising are helping because gold financing companies have now that much more room with a higher gold price to lend based on the stocks on hand. So, and then the second leg of the cycle, Nandita, I want to point out is that what I see that the consumption cycle is ultimately going to lead to better capacity utilization and the start of a capex cycle. And a capex cycle is not seasonal. It lasts for about 3 to 5 years for the entire capacity expansion to go through. While I still believe there is some way to go, maybe 6, 9 months more for the private sector capex. But when that starts, it's, mind you, it's not just the stock market companies, it's the SMEs and the MSMEs which will be going to be executing those expansion orders. And there, the lending by the public sector banks, is the key, because public sector banks are the ones who have an experience, multi-decadal experience in lending to the MSME and the SME sector. And these loans are at fairly good yields. 13 to 14%. So you'll see public sector banks, not only their loan book growing, their net interest margins also will be positive. So overall, I see that's a good space. And since we are talking BFSI, let's not forget the non-lending side of the BFSI space, right? You have the stock market infrastructure companies, the wealth managers, the asset management companies, the insurance companies. With all this income tax benefits and everything flowing through, definitely we are in a stage where the per capita disposable surplus, whether that's saved or spent, is the question in front of the customer. But definitely from the savings part of it, I think the banking system as a whole, when I take the overall wider system, is poised to grab that share of the individual's money. And so I think the entire BFSI space is poised. Yes, last year it has been the top performing, it has done well. So obviously for next year to repeat itself will be a challenge because your base is larger. But still, there's no, as far as I see, not too much negatives around the sector. Is by and large a positive story. So FIIs, FDI is already coming into banking. FIIs, as you said, they are underweight still this year. So next year, if that corrects, you can see a fresh leg up for the entire BFSI space.
Right. We discussed a lot of things already, even, in our previous interviews. But I want you to list out 3 themes in a pecking order that would be your favorite themes for the next Samvat, say 1 year.
So when you have 1 year in mind, for me, it's okay. One section of the consumer durable will come to play in summer. That's the cooling segment. So air conditioners, refrigerators, water coolers, those. So that leg of the rally is not, it's not the key part now because people buy that only in the summer, right? So I think there's a one consumer durable play. And I'm going by the fact that the last 1 year returns for the consumer durable index have been negative. Despite all this festival season and all that growth, overall Nifty consumer durable index is still down -4%. So there is enough catch-up space there. And so I think halfway through next year, during the summer, you'll see a strong leg up rally happening in that portion of the consumer durables, which I think is then a good pick from that point of view. The next sector, also related to consumption in a way, is real estate. And in real estate, why I'm positive for this Samvat is because after this auto-related and television-related rally, which is dominating the summer, the festival says, and the next is the consumer durable, the cement prices have also got GST easing, real estate as a sector. But the real estate sector is also one of the most underperforming sectors for the last 1 year. So the margin of safety is there. Yeah. But second point is that the problem there, see, in the case of consumer durables and auto, right, it was a case of demand not keeping up with the supply. There was adequate supply, enough car manufacturers, enough durable manufacturers, enough there in the marketplace. But in real estate, all the developers, right, all the bigger ones and all, have been focusing on the very high end of luxury real estate. The villas and the penthouses and the big, and those are the ones who are selling. So nobody has prepared for the affordable housing segment yet in a big way, and because the demand wasn't there. But now with the concerted effort of the banking system as well as the GST cuts happening, I think that you will start now, the supply will step up in terms of real estate developers launching affordable housing projects. They need to tie up the land and launch, and then, so they'll take a bit of time. But when that happens, because the maximum impact of an EMI cut is the leverage, right, is will be seen in the real estate because these loans are 15, 20 years. So small drop in EMI can enable you to buy a much bigger house, right? So I think that, or at least buy a house which you were not planning to earlier. So I think that the real estate sector is the one I believe that given the past underperformance, given the positive impact of GST and of the rate cuts from RBI which will flow through, is probably to me geared from a domestic perspective to be an outperformer. So that's my second pick for the from a 1 year, the next somewhat perspective. The third pick is purely the Contra IT pick because I believe it's a matter of time before FIs return, before there is some kind of a resolution on the trade side. I don't think we are going to see one more year of this whole trade uncertainty with America as far as India is concerned continue. So with that belief in mind, the point is I don't know when it's going to happen. So there is a bit of a risk there that we could go a bit further down before it goes up. But from a 1 year outlook perspective, I believe that IT as a contra bet continues to be in play. And the other pick is something which I already mentioned. I think public sector banks, they are the ones, despite the rally that's happened, I think there's enough scope, because I said mergers, increasing the FIR limit in public sector banks, and the business growth coming from capex revival make a very strong case for public sector banks also, in my opinion.
All right, there was four top investment themes by Sunil. But Sunil, let's discuss what's been happening in the precious metals universe as well. A lot of people or investors are driven by the feeling of FOMO. We've seen or we've been in uncharted territories as well. But of course, heading into Samvat 2082, some bit of correction has been seen. But there's been a lot of debate as to whether investors should increase their allocation to gold in their portfolios. Do you think it's just a FOMO-driven feeling, and one should not look at unnecessarily increasing their gold allocation because much of these factors that have driven this rally, some experts argue may not be fundamentally driven as such. It's only about what's happening in the US, the geopolitical threat, etc., even the tariff-related stuff. So how are you looking at it, and what advice would you give to those investors who would rush to just increase their allocation to their portfolios?
So I think that first of all, the industry has to take responsibility. When I talk about the industry, I'm talking about the equity market infrastructure industry, whether it's wealth managers or it's fund managers or whatever in the overall stream, that we have beaten down gold historically. We've always said gold is a non-earning, non-productive asset class. It's only a safety pick, so it will not outperform. Equity is your real wealth creator. So allocate to equity, and you have downplayed gold. And today we have egg on the faces. Let's openly admit it, right? You have egg on your face because you have not allowed gold to be a part of a customer's portfolio as a diversification. And what's happened is that when you say that it's not fundamental, I disagree, because we tend to talk about fundamental from a sector's earnings perspective, because the market is geared to discounting future cash flows to arrive at the intrinsic value of a share, right? Or a sector or a stock. In the case of gold, right, what is the fundamental factor that you have to look at? Because there is no earnings, right? That's what I think 17 or 18% of gold is to actual industrial usage, right? So 80% of it is not industrial usage. So you can't do your traditional fundamental. But when you say fundamental, there's a macroeconomic fundamental which you have to consider. And what's changed there? I think that's where, again, as I say, the fund management and the overall wealth management space has to take responsibility. What's changed there is the recognition that, it's kickstarted with, it ended with Mr. Trump's coming to power and putting that. But even well before that, right, there is the increasing concern around the sovereign wealth funds and the countries of the world of an over-dependence on America. And America's fiscal deficit has been ballooning, their debt has been ballooning, there have been warning signs, but American stock market has been exploding. So today you have a situation where 30% of the world's economy is in America, but 65 to 70% of the stock market. So the increasing worry about the rest of the world which had surpluses, Japan, China, about their overexposure to America. I think that's the fundamental feature, that worry. And that's why China and Japan, among big countries, have started shifting their allocation away from the dollar. Now, their first move there was, especially for China and Russia, then before the Russia-Ukraine war itself, was to see whether a BRICS currency could form an alternative. but that didn't take off because China and India had problems with Galwan and all of that, and Russia went to war with Ukraine. So BRICS as a currency never took off. And Mr. Trump came, he further said, if you do that, I'll be very harsh on you all and all that. So the de-dollarization, that is the desire to move, and Russia-Ukraine war led to a freezing of Russia's dollar balances. So that gave us sharp lesson that if at all you take panga with America, then whatever you invested in dollar is going to be at risk. So there's a fundamental change in the perception of people that earlier dollar was considered the reserve currency, the safest currency that you could blindly put, that US would never come and put a hold on your thing. You could take it out, put it back, all that convertibility, everything is there. But this lack of slowly dimming confidence, and you can't do that overnight. So China and Japan especially have been shifting their reserves for want of any other options into gold, because that's the one which is solid, which is limited, and hence there is a value to it. And that is the fundamental move which has happened. Last year's move was actually a second order move, not by the sovereign wealth funds. It's because individual investors in the developed nations started seeing this and started pouring money into gold ETFs worldwide. So now it's become a philosophy that not only the sovereign wealth funds, but individual HNI investors across the developed nations are pouring money into gold ETFs. And this fundamental change, that the world is looking for a new equilibrium on how much dependence on the dollar as the place to park my surpluses. Japan is an export surplus, trade surplus country, right? China is a trade surplus. So that is the fundamental change which has happened. And hence, I'm today of the view that you must increase your allocation to gold from what you historically recommended as a wealth management, fund management, in stock market related thing, right? So historically, I used to say 5 to 10%. I'm now saying that you should make that 10 to 20% in recognition of this new reality. See, it's not about India buying gold for jewelry or for festival, for marriage. We have always been among the largest buyers of gold. We haven't changed. We are a base effect. We are always there as a buyer. But the delta that's being created is this international demand for gold, which is one of the factors which is the cause of the fundamental change in the position of gold. And silver is benefiting by the spillover because gold has risen so much that people feel that, oh, there is a risk. Margin of safety has dropped dramatically for gold because of the rise. So back to silver. And silver is aided by a shortage of silver as an ore, and second, higher 55-60% usage in industrial. So where I'm coming from is that this is the new reality. And you have to recognize. Now, obviously, what is the new thing? My suggestion is that from a 5 to 10%, you have to change this to 10 to 20%. Because gold still remains a diversifier. It is not the primary wealth creator. And tomorrow, if tariffs gets resolved and suddenly Mr. Trump has a new nirvana moment, enlightenment, and says, oh, no, I'll become friends with the world and we'll do, then obviously gold will correct. So there's always, but the fact of the matter is also fundamentally, one more thing, you mentioned this, Nandita, that's the FOMO. So now when you're talking to an investor and you say, no, you're old. See, one definition of insanity is that when everything else is changing, you keep saying the same thing, right? So why I'm saying this is that we have to recognize that customers have seen that as an advisory industry, we have not advised right because we didn't have a fortune teller thing about the future. But they feel that, oh, if only I put my money in gold. So FOMO is also a fundamental fact of an investor's appetite, which you must recognize. That is also fundamental. So to me, you can probably now shift the allocation of gold to 15 or even 20% based on your risk-taking capability. And silver is in addition to that, according to me, half of your allocation to gold you can put into silver. So you're then talking that for a very aggressive-oriented investor, you could actually have 30% in precious metals between gold and silver, right? But of course, your risk and your other appetite and everything to take, considering that something is all run up fast. But I think that, yes, a fundamental resetting of the way we look at gold because of the geopolitical and the geoeconomic. Remember, the tariff has a big issue to play with this because tariff is a war, just like a physical war on the ground. This is the new reality. And Mr. Trump has still another 2.5 years to go. Right? You know that uncertainty is going to be, Mr. Trump's another word is uncertainty, right? So to me, there is a huge TERP. I have coined this called TERP. I don't know that I mentioned it in the last time. The Trump uncertainty risk premium is something that the world has to pay. And that is where that is
We had
playing out
TACO earlier, now we have TERF as well.
So I'm just saying is that the gold is the safest way not to make Mr. Trump angry. Like if you openly go and say now, oh, I'll not deal with the US dollar, I'll do a BRICS currency, he's going to get angry and do something even more, unpredictable and in for quoted little words. But gold is, if you're putting your money in gold, he's not going to come and say, I'll punish you, I'll put a tariff on you on gold. And one of the underlying factors which we have to analyze, which is a big if, Nandita, is if the US chooses to revalue their gold reserves as a paper method of solving their problems. It's not a genuine method. A revaluation is always considered an intangible. But Mr. Trump forced to the brink. There are still talks about it that the huge gold reserves he could revalue it in order to, on a paper surface, to show the US fiscal deficit coming down, which could lead then to even greater, so but now that's an uncertain thing. I'm not sure Mr. Trump's going to do it, but I hear news and talks, people already discussing the what if scenarios of that. Because so, given all of this in mind, I think that history has taught us, the markets in their history have taught us a lesson that you ignore any asset class at your own peril. That's where the whole world, the key of diversification, that you maintain everything. And historically, you say now that gold was a contra to equity. In the US, it's not proved to be so. Gold has been rallying, equities in the US also has been rallying. So these fundamental rules.
Exactly, in tandem with equities.
So I think it's just the recognition. So in fundamentals, you have to give a value to the macroeconomic situation as it's developing. Obviously, gold can correct for phases, but I think the fundamental reality of the world is that gold is now an important investing asset class for sovereign wealth funds, for HNIs, and so for broader investors also. Better they recognize it and have it. And that's where the mutual fund industry, if I may say, has a reasonably good product called the multi-asset allocation fund, which allows you. And based on, if you want equity taxation and you want to keep 65% in equities, then you're limited to over 20% in gold. But if you choose to really manage a multi-asset allocation as a open, saying I can do how much gold as you want, a fund manager taking that call, I think multi-asset allocation fund should be a critical part of customers' portfolio, because then you are letting the fund manager take a call on that, as opposed to you're saying how much of gold I put in my portfolio. You diversify across maybe 3 multi-asset allocation funds, which have fundamentally different approaches, so that then you're playing gold with an experienced hand at that job, right? Rather than you're going and choosing, saying X percentage I'll put in gold ETFs, because multi-asset also are more tax efficient than ETFs. So it's also a more a better way of buying gold through a multi-asset allocation fund than to go and buy it directly through an ETF. That's for tax. It's a little more benefit.
Okay. All right, that's great advice. Buying or investing in gold via multi-asset allocation strategy rather than just going and buying gold ETF. But last question really, Sunil, as we wrap up, for Samvat 2081, so to say. What's that one biggest mistake investors made in Samvat 2081 that they should avoid repeating? What would that really be?
One mistake that investors made in Samvat 81, I mean, ignoring gold, if at all, right, is one. But they've caught up now. Last month, September, you saw that gold ETF had a 4x multiplier. I think from 2,000 crores, it went to 8,000 crores net flows. So clearly, they themselves felt that they had made a mistake of not allocating to gold. But then remaining within the equities space, right? I would say that I would just call it as lack of proper diversification. I think they chase a lot of sectoral NFOs. They'll chase a lot of mid and small cap, SME exchange IPOs, right? In the king. I think those were the funds. The IPO index has delivered -5% for the Samvat, right? So clearly, I think that they have been going by a flavor of the thing, right? So I think to that extent, when you once you go into the flavor and you over allocate it, you're saying no to basic principles of diversification and asset allocation to meet financial goals. So I think that they probably got a bit, I would say, astray, because they saw the fabulous returns of certain sectors. Hence, every sectoral related NFO that came they went and put their money, right? So I think probably forgetting the basics of goal planning, asset allocation, and diversification, which are the hallmark of good investing. I think this year they probably got tempted into a flavor of the season or this that I think that temptation, if they had avoided and they had stayed diversified in a true sense of the word, right? I think they would have been better off. I think that's
Sure.
the key thing. That when the markets go through these kind of period, people tend to forget their basics of investing. I think that's the lesson I would say uh, that stay diversified at all times. You know which sector, which stock, which asset class is going to come to your aid. Because at the beginning of the year, nobody predicted what happened during this year, right? So diversification is something that you have to keep following. Don't get worried about for example, I feel that if you look at it, maybe they are underallocated to IT because of what's happening. But who knows, next year IT is the best performing,
Yeah.
then last year is the best time to have invested in IT, right? So I'm just saying, it's just from a principle of not to say that, oh, IT, they should have gone, but as a part of a diversified pool, if IT also would have been in a part of their allocation, right? That would have been, that's the best from the next year perspective. So I would say just that one word, proper diversification based on choosing the right asset allocation based on a financial goal, that the purpose of the equity market is to deliver your future needs, right? Your future wealth creation and
Sure.
aspirational needs. So just the one word I want to say at the end is that ask the people should look at investment as nothing but a postponement of their consumption. And so you want to buy a better thing tomorrow.
All right, that's very
Instead.
well put. Very well put, Sunil. Well, with that, we are out of time. Sunil, would like to thank you for all your valuable advice, and I enjoyed, having so many conversations with you. Always gain a new perspective, and I look forward to more of these conversations in summer 2082 as well. And let's see whether equities play catch up or not in the new Samvat. But wishing you all the very best for the upcoming Samvat. We have Murat trading tomorrow, and hope that your portfolio remains firmly in the green in summer 2082 as well.
Thank you, Manda, and the same for all the viewers. I do hope their portfolio also remains in the green.
Thank you. Thanks a lot. Well, with that, we've come to the end of this edition of Closing Bell. Thanks a lot for watching. Of course, we've wrapped up summer 2081 with a single digit gain on the Nifty. Tomorrow is the Murat trading session, 1:45 to 2:45 p.m. But stay tuned to Money Control. We will be getting you a whole host of big voices, stock recommendations, the themes to watch out for in summer 2082. Lots to watch out for on Money Control. So stay tuned to this space, and wishing everyone, all our viewers, their families, their loved ones, a very, very happy Diwali, a very prosperous year ahead, and health, wealth, peace, prosperity, may all that come your way. Thanks a lot from entire Money Control team. Have a great evening.